Apex has a great deal right now where it's 90% off for passing valuations, and it's also a 1 day pass. So this is a great opportunity for anyone looking to get funded. And this deal lasts until December 17th. It's a kind of a Black Friday holiday deal. Use that coupon code you see on the screen, and it's in the description. How I passed my 20 accounts is I used this deal that they have currently, the 1 day pass and 90% off. That's how I pass almost all of my accounts. 1 day pass is the best way to go ahead and try to pass your account. The trade I'm in, I'm buying above this. I want to pull up the daily chart. Look at the last couple weeks. We've been in this fairly tight channel moving up, mostly bull bars. Any of these tails that are on the bottom of bars, most of these tails occurred early in the day or the first half of the day. All right, we can see, let's look at the last 3 days. Each of these last 3 days have tails on the bottom of them. In a bull trend, when you see tails in the bottom like that, that means that those tails occurred early in the day. When I see a market moving up like this, then when I'm trading on the 5-minute chart, I like to try to buy above bars early in the day. It could be late in the day as well, but especially early in the day for a bigger swing up. You can see yesterday I have some trades marked from yesterday. I thought here was a reasonable short. Double top, below the moving average, probably reasonable short there. And then, like I was talking about, notice this is the low of the day here and here. These lows here. That came early. That came in the first half of the day. And it was a trading range day, but the second half of the day basically was a trend up. And knowing that we're in a larger bull trend on the daily chart, I like to try to buy above bars like here or above here. The day before that as well was a similar story. I thought this was a good buy here. We have a wedge pattern and then double bottom, probably pretty good buy there. I did take this buy, and I just, on this pullback, ended up just getting with a small profit, selling out here. Then you can see low of the day came early in the day, and the rest of the day trended up. Ultimately, it was a trading range day, but that second half of the day was clearly more bullish than bearish. So my bet here today is that that's going to happen today as well. It might not, right? We're not going to be perfect, but with the context what we've already had a test of the moving average. Bears tried to go lower, and they weren't able to, and now we're going higher. Possibly you could buy above this bull bar. I felt like it would be better to wait. And then we're getting strength here, so I bought above this. And so far, I have no reason to get out. I have the first follow through bar was a bull bar. We didn't like to see this big tail on the top, but at least it was a bull bar. And the second follow through bar was also a bull bar. So that's good for the bulls. Even if there's a pullback below this low, I still won't be getting out. I would still need more evidence to get out. So until I have enough evidence, I'm just going to hold this long and try to get my 5 points. It's a pretty steep pullback. I want to see how this bar closes because it might not be enough for me to get out, especially if the bulls were able to create this big tail on the bottom. So I want to see how this closes. If it closes something like this, then I'll stay in the trade. But if it ends up closing lower down here, then I'll be looking to get out. But we'll see how the bulls can close this. Think about the bears that are shorting through here. They want this bar to close as low as it can. So they'll try to sell into the close. The bulls are trying to prevent bears from closing low. So they'll be trying to buy into the close. So it's always interesting to kind of watch that arm wrestle between the two, because they're especially active in that last minute or last 30 seconds of a bar. So I'm going to end up holding here. What this move back could be is a test of the open before heading higher. So there's a decent chance we'll try to bottom here before making a move further up. So that's kind of what I'm betting on. And if we get stopped out, then that's that. But I think it's reasonable to just go ahead and leave the stop here and bet that market will try to bet that the buyers will be stepping in around here. So I moved my stop below this bear bar. I was okay with holding it down here while we were getting these big tails on the bottom of the bear bar, but once we have this larger bar, I felt like bulls would be getting out below that if it went below it. So I'd rather go ahead and save my point or two here and just take that loss, because I feel like if it went below this bar, the market would probably come down and touch the moving average and to stop us out. So sorry, I didn't have my microphone up to my mouth. What I'm not sure if you heard me, but what I was saying was I moved my stop below this bar here because, well, initially I didn't move my stop up because we were getting tails on the bottom of these. Like this bear bar had a big tail on the bottom of it, and because of that, the bears didn't look too strong, and the bulls would have a good chance to be able to buy it back up. But once we got this larger bear bar closing below the previous bar and closing near its low, I felt like if the market went below it, then it would probably go down to the moving average and stop us out. So I figured I'd save a couple points and just go and get out below that. The advantage of managing the trade in that way is what you see now, right? The market did not go below it, and suddenly the bulls are having this huge resurgence on this bar here. So when you manage your trades by placing your stop below a strong bearish bar, then you're going to get out because the market's going against you. And some percent of the time, you're also going to just stay in because the market doesn't actually do that. And if it can't go below it, like here, then that gives a chance for the bulls to take back over, which is what we're seeing now. So really strong bull close. Great for the bulls. Probably going to get up a little bit more up after such a strong close like that. So it's better for the bulls. There is a concern that this is a second leg trap. So this is the first leg up. And then when you get a second leg up in a trading range like this, oftentimes that second leg up will look stronger than the first leg, but that second leg ends up failing. There's a chance that that's what will occur. But I'm leaning more towards this having more up. So now that we've gone above this previous high, I think I'm going to go ahead and move my stop up here, at least lock in a little bit. So either we come up another point and get our 5 points, or we, get out with a point. So ultimately, this pullback that happened here, that almost spooked us out. Ultimately, that was just a test of the open. So that's another reason I didn't get out somewhere during here, was because there's a chance that this was just a test of the open. Market just wanted to pull back and just see what was at the open, and it found buyers, and then clearly found a lot of buyers, and now we're heading up. Oftentimes at previous highs, especially in a trading range, there will be sellers above bars, and they'll be scalping. What is the minimum scalp nowadays? I guess it depends on what your strategy is. Some people say it should be 5 points as a minimum scalp. And generally for me, that is what I would like to try to go for is 5 points. If you're doing limit order scalping, like selling above bars like this, I think it's often okay to go for 2 points. Now, I wouldn't go for 1 point. I would try to go for at least 2 points. These ranges are just too large to be going for 1 point like it was a few years ago. So I think going for 2 points is better. So if there are sellers above these bars, we see bar 1, sellers above made money. Above this, made money. Above this, Well, it went down 1 point here. So they could have made 1 point, but I would think most people are trying to go for 2 points or more. So I would think most people that were selling above here are still in that short. There's a chance they might feel a bit trapped because they haven't been able to make their 2 points yet, or their 5 points. So this bull bar closed right at the high here. Didn't close below or above. Either way, a bull bar is good for the bulls, right? It's better to get this as follow through instead of something like this. To me, it looks like we're headed up a little bit more. I think it's reasonable to have the have our stop and profit where we have it right now. So 20 seconds left on this bar. Because there is so much of a risk of us still just being in this trading range and possibly making a move down somewhere down here because it's a trading range, I think if we have any kind of bear bar here, I'm going to just go ahead and move my stop below it. So I'll do that here. If it goes below, we'll get stopped out. If not, right, then we'll go ahead and get our 5 points on the way up. Yeah, multiple reasons I think it's reasonable to get out below this bar. Could be a wedge. So we've had a first push, pull back, second push, pull back, third push. We have this wedge pattern. So this being a wedge pattern, possibly failed breakout of this high. Possibly a second leg trap where this leg here looks stronger than this leg. Then for those reasons, it's good to go ahead and get out below that bear bar. And from the data I've collected on the trades, for me, it is better to manage the trades. So my profitability is greater when I go ahead and manage it like this instead of leaving my stop somewhere down here. So bulls trying to break out above here, trying to give us our extra point or two. Let's look at these the limit order scalpers that we're selling here. Let's examine if they had made money. So 86.75. They need 2 points. There were probably many scalpers who are trying to go for 2 points. So if they're selling there, they need to get down to 84.75, which they have not yet done. So if the bulls were able to break strongly above this, there would probably be some trapped bears that are trying to short here that are trapped in, which would in fact propel it higher later. Let's say we got a strong bull bar here, and then maybe another one. Well, then those bears are going to start getting out of their shorts here, and as they're buying back, that would just send the market even higher. If the market does end up going higher, what kind of target are we looking for? Different ways we could draw a measured move, but how I would look at it currently is from the low here to the high of the day. And that measured move puts us around 6,100. So we have this opening range here. Often when you have an opening range, the market will double the size of that range. So with our context from the daily chart, right, strong buying, strong consistent buying, lows of the day are normally coming early. When you have an opening range, that opening range often doubles in size. So if we're just having to bet that which direction is this market going to double, the better chance we want to come up here to the top of our measured move. We want to test 6,100. So I'd be leaning towards that this is more bullish than bearish. So even if we get stopped out here, I think bigger picture, market's wanting to double its range, and it's wanting to come up here to 6,100. Another bullish close. Didn't close above this previous high we have here, so not as strong as they could have been. It's still a bullish close though, still good for the bulls. Bears aren't too excited about having that close there. a it could possibly be another wedge pattern. So, we have this wedge here. Possibly what the bears are trying to get would be they'd be looking at this 3 push pattern. So push here, then a second, and then a third. So if there's a bear bar here, I would definitely be looking at trying to get out below that bear bar. Another way to look at this, let me clear up my screen a little bit. Another way to look at this is we have these high closes here, so these bodies here, and then we have these closes here. I'll draw a line right there. So we have 2 closes here, so there's some sort of resistance there. When we broke above it, the bodies have not overlapped. These, like this bear body, did not overlap with these bodies through here. The tails have overlapped. So the bulls aren't as strong as they could be, but the bodies have not overlapped. So that's still a sign of bullish strength. It's better when the tails don't overlap, but there's not too much overlap here, and the bodies haven't overlapped. So bulls are still looking fairly strong. However, like I said, if we get a bear body here, I think the market will read it as a wedge, and they might also look at this bar here being a second leg trap. So in this case, these 2 bars here would be the first leg and pull back second leg. And then that second leg, it's high up in the trading range. Decent chance it would fail. So I think if this bar forms as a bear body, then I think there'll be, not only would bulls begin out below it, but I think bears would get in to start shorting below it. But that's only if it forms as a bear body. If it does form as a bear body, I'm going to move my stop up below it and go from there. We are at all-time highs, by the way. So every tick that we go above, that's another all-time high. So there we go. Just made a new all-time high. I'm going to move my stop. When I get within 1 tick, I usually move my stop up pretty aggressively. So we'll have it where it is now. A quote I heard a while ago was, this was from someone that had been, on Wall Street for a long time. They said they never sell at an all-time high. They never sell above an all-time high. And so often, what you see when you get to an all-time high is the market does what it's doing here. Is that every day is this kind of, it's either breaking out above or it's sort of trickling up, right? Because once it goes above an all-time high, everything below it is just like a floor. So, and there's no ceiling because we have no prices above to act as that resistance. So the market gets to an all-time high, right? Your thinking should be leaning towards how can I get in on the bull trend and the chance that there's this breakout above, instead of trying to think how can I short it. Because if you looked at the S&P for the last, well, really probably on any long-term time frame, if you're shorting it at the all-time high, that's a terrible thing to be doing. Actually, buying at the all-time high is historically the best thing to do. So just waiting on a couple more ticks up or down here. I could just get out the market, I suppose. We've had 1, 2, 3, 4, 5, 6 bars where the low has not gone below the prior low. Right? Each low is a little bit higher than the prior low. To me, that means the first time it goes below it will be bought. Kind of look at like this move up here. All of these lows were above the high of the prior low. and that ended up being bought. So people were buying below this bullish bar here, and as the market fell, they bought more, probably right at the open of the day. And that's probably what was happening through here. They were buying, they were scaling in. There were other people buying at the open of the day, and buyers won out here. Bears realized that and quickly got out here, creating this strong bull bar. You know, the market's forming wedges here, but we haven't gotten a bear bar that we can sell below, or at least the market has not gone below a bear bar yet. Like, we got a bear bar here that I would be getting out below, but didn't go below it. And there's a couple more ticks, one more tick. I believe if we can get above this bar, we'll probably get a few more ticks up. And that's the thing that can surprise you in trends, is that trend will continue going longer than you would think it could. That's one of the risks of being people that sell above these prior highs, right? Yes, they made money here, they made money here. However, so you know your probability is high of making money when you're selling above like bars like this, but when that breakout occurs against you, you can really take on a large loss. So for beginners, should not be selling above bars like this. And some advanced traders do that, but you don't need to do that to be like a profitable advanced trader.
Stop filled.
All right, so got out of the trade, got almost 4 points on that. So reasonable place to entry, reasonable place to get long, and I think we managed it correctly there. So this is an Apex funded account, and you can trade up to 20 accounts if you like, and you can copy trade them like this. So you can take basically just one entry and then have that copied across up to 20 accounts. And right, so instead of having to have one large account, you can have many of these smaller accounts funded by Apex, and then you can profit that way. And Apex does have a great deal right now, 90% off, and you can pass in one day. So you can try to. I have a couple of videos on how to pass the Apex evaluations. But also, I think just try to take trades like this. Try to buy above good bull bars and go for however many points you would need to pass it. So the deal lasts for December until December 17th. So if you're interested, I think now is a great time to go ahead and try to pass those. All right, guys, have a good day.